What's up, everyone? Today is December 31st. It's the last day of the year, last day of the trading year as well. I talked about this last video too, but as it is the last day of the year, just take a minute to look back at what happened throughout your year. In terms of trading in life, just reflect on, your biggest accomplishments. Look back at your biggest mistakes. Everything you do in life, you can learn from. So, everything is just a learning curve. Just look back at your mistakes, your accomplishments, what you realized from them, and, just how you grew as a person in general. But that being said, I want to cover the one trade I took today. I took Roku again. I took it earlier in the week and I made money on that around the 237 key level. The level kind of shifted, it became 238.5. So, I took the same trade and I made money off of it again. But, this market, I'm not gonna lie, has been very, very tough to trade, and breakouts are, not working quite as well as they used to previously. So, in addition to this Roku trade recap, now I want to talk about a couple of other lessons that other traders pointed out, and I'll cover that at the end of the video. But let's get straight into this. Let's go to higher time frames. All of my trading theses start on the higher time frame. Okay, so let's open a blank chart first. Okay, so I kind of already had a blank chart drawn from Roku. If you want to see me, construct this layout, go back and watch my most recent Roku previous recap video. But essentially, all I did was draw out some, major supply zones and some major demand zones, and this key level that we were watching. This level, now became 238.5. I'll go down to the 1 hour time frame and show you that a little bit more clearly. Let me get rid of this last trade right here. But if we go to a 1 hour time frame, I'll show you how powerful this level is. Acted as resistance once here, acted as resistance twice here, and then all of Friday, or all of Thursday was acting as resistance, and even some resistance on Tuesday as well. So my plan was the same plan I had earlier in the week, which was Tuesday. It was to take a breakout of this key level, targeting higher prices. First target would be 240 because that's a psychological level. Second target, it's kind of subjective. I would probably say 245, maybe 244-ish. So anywhere from 244 to 245, because while it isn't a key level I would take a breakout of, it's definitely, a level where, buyers and sellers have shown interest. You can clearly see that, act as resistance, resistance, support, resistance, resistance. So, 244.5 would not be a bad target. Then, 250, my bad. Then, we try to go for 250, and then finally 256. I'm not sure which supply this is. I think it's 3 hour. I'll just double check for you. Nope. I think it was 45 then. Yeah, it was 45-minute supply. This is a very, very clean supply. So essentially that was kind of my plan going into today. All that was left to do is execute. So let's go down to video where I can pull SPY and Q side by side. So Roku, and this trade, like many others, happened in the first 5 minutes. So we broke through the key level, which is exactly where I entered, no hesitation at all. Then we pushed through 240. I actually took my first partial here at 241. I took it on this candle as we started coming lower, so somewhere here. And then, a couple of people were wondering, SPY and Qs was so choppy. Why would you take this trade? So you have to keep in mind that I only had 5 minutes of data because this trade happened in the first 5 minutes. And this is what I saw in the first 5 minutes. SPY and Qs were consolidating overnight. Same with Qs. Both of them are flat. And then both of them have this very, very strong push off the open with no fresh supply ahead. Roku did the same exact thing. So from my perspective, it looked like we were going to have some sort of a breakout day. And, that's exactly why I entered Roku. Next candle on Qs was a basing candle. And look what Roku did. Roku retested the 238 key level and moved higher, hence this lower wick. So, at this point, I was really expecting Roku to complete the 5 minute RBR as, Spy and Qs and Roku all had a very similar setup. This type of setup usually continues in a move higher. However, in this case, it did not happen. My stop for the remaining half of my position, I entered 100% of my position here, scaled 50% here, and then, my stop was a little bit lenient. It was, a break of 238, so ended up selling the last two right here. And, these two contracts were at a loss. However, I entered X amount of contracts at 2.45, scaled half at 3.6, and then scaled the other half at 2.01. So, while I did lose money on the remaining half of my position, I was overall profitable or green on this trade because I got a very good fill on my first half of my position. So, not a very complicated video. I kind of set myself up in this trade. I took profits in the beginning, and I set myself up so that if Roku wanted to move higher, I would be a part of that move higher. But if we weren't, but if Roku was not willing to move higher and decided to come back to my entry point, I would get out. So, I was prepared in both cases. I was prepared for the worst. I was prepared for the best. Did my best to leave emotions on the side and execute. So, I think I executed this trade flawlessly. No improvements on my end. What I'm really proud of myself is, despite it being a Friday, despite premiums jumping all over the place, I traded the chart only. I waited for this 5 minute candle because, at this point it looked kind of scary. It was a very big red candle followed by a big green candle, but I knew that, this level should act as support, and, I followed my plan. But that's kind of the entire trading recap in terms of technical analysis. I broke Roku down from the higher time frame and then all the way down to my intraday executions. But I want to cover a couple of points that a couple of other traders mentioned. Just give me a second. Okay, so the first thing is more lessons on price action. What is healthy versus, healthy price action versus, abnormal price action. So this in my scenario is considered healthy price action. Healthy price action is when we break a major area of of resistance or support if you're playing to the downside. But in this case, let's take the upside. We break a major area of resistance. What should happen is we should retest that level and then continue to move higher, because as everybody knows, the market will not just move straight up. It moves up, it consolidates, and then it moves higher. So objectively, I'd say a couple of tips to look out for healthy price action is if we're moving higher, consolidating, moving higher, consolidating, moving higher. In those consolidation periods, you do not want to see us break the previous structural low. So a good example of this is Roku this day. So Roku is moving higher. Let me just draw the bottom of this. It consolidates, but this low never breaks this previous low right here. So we consolidate and then we move higher. We have a nice push up. We consolidate, we pull back, and this low is higher than the previous low. So higher lows is a very good structural price action, and it's considered to be healthy price action. So that's kind of one example of healthy price action. Another example is, once we break a key level, we retest it and we move higher. That will not always happen in every scenario. For example, in this scenario, that did not happen. But nonetheless, those are kind of two things to look out for healthy price action. And in my opinion, the best way to trade them is, sell at the tops. And then when we consolidate, don't be scared. As long as as long as we're holding the level or we're holding the previous low, and then as we move higher again, sell on those other pops up. So that's kind of healthy price action. What I'd say is abnormal price action is something which happened on Netflix yesterday. So abnormal price action is when we break a major area of resistance and we instantly fail. So instead of it being a pullback, instead of it being a consolidation phase, it's a very aggressive move to the downside. So it's kind of hard to tell this from the chart itself, but if you were watching Netflix yesterday in real time, this was also a trade I took. If you want to look at the exact breakdown for this trade, go watch my video I made yesterday. It's a pretty short video as well, but nonetheless, it abnormal price action is when we break a major area of resistance. We have a nice push up, and then within seconds, we instantly pull back. That lets me know that we're not consolidating. Instead, that lets me know that there's an aggressive seller, placed at 618 to the 619 area, and they do not want to give up this level that easily. That's kind of one thing to look out for. Another thing is volume versus how big the actual bar is. So this is a very good example of that. You can see that from 950 all the way to 1005, all of the length of these bars were about the same. They all moved in about a $2 range. They all had somewhat equal wicks. But I want you to look at this volume right here. The 9:45 to 10 o'clock volume candles were about the same, and then this 10:05 volume candle was significantly greater. So if you see, significant volume which doesn't match up with the candle size, for example, this volume right here matches with this candle size. Big volume should result in big candles. However, this big volume spike at 10:05 should have resulted in a clean move through 238 and a move higher. However, that was not the case. We had a big volume spike with a little candle, which let me know that there was, abnormal that there was that there was abnormal price action. Sorry for that. And whenever you see abnormal price action before you're taking a trade, you should in most cases not execute the trade. Or if you see abnormal price action when you're in a trade, you may want to consider taking profits quicker or getting out of the trade completely. So I think I did a pretty good job explaining that first point. If you have any other questions, just always hit me up on Discord or YouTube. I'm active almost every single day, so I'm always there to help people who need help. But the second point is a very good point, which another trader brought up. He said ways to combat different markets more specifically. So how do you trade breakouts in a balanced market? So that was a really good question. Let me show you what a balanced market looks like. We're currently in one right now. I think a better example would be Qs. Okay, so look from November 19th all the way to December 31st. We've been consolidating in about a 1,000 point range. So for Qs, for NQ, a 1,000 point range is not a big range at all. However, we've been consolidating, from this low all the way to this high. So when we are in a balanced market, let me just move this. When we are in a balanced market, the best thing to do, in my opinion, is to take profits much quicker. So I'll give you an example of this. If you go to a 5-minute time frame here on Roku, I did take this trade right here, and in balanced markets, you should always look to scale out, or one, scale out more aggressively, and two, take profits much quicker. So usually the way I go about things is I'll either scale 33% of my position or 50% of my position on the first move up. But in balanced markets, it makes sense to scale 2/3 of your position or 3/4 of your position, or even in some cases your entire position on the first move up, just because the probability that the breakout is going to sustain is much lower in balanced markets as opposed to imbalanced markets. So let me give you an example of imbalanced markets. Again, go to a higher time frame on Q. You can see that this move from October 4th all the way to December 19th was an imbalanced market. And in this type of market, these types of these types of breakouts are going to have continuation. The probability that Roku would have broken this major area or this major resistance area and moved higher would have been a lot higher. So that's kind of one point I wanted to cover. Balanced markets, how to adapt to them. Doesn't really mean the strategy is changing. It just means that you're adapting slightly. But I think that's it for this entire video. If you have any questions, as always, hit me up on Discord or post a question in YouTube, and I will do my best to get back to you. Now until tomorrow and the New Year, so stay safe, and enjoy the holidays.